About 18 months ago, the management over at AMC warned the investors that they were going to lose a substantial amount of their money. And fast forward 18 months, and they're now pretty much are down around 80 to 90%. And I do believe that the AMC shareholders that are holding on, the ones that are diamond handing this thing, are expected to lose even more of that money. And so that's what I'm going to cover in this video. So guys, as you smash that like button, let's get into it. What's up guys, and welcome back to the channel. And I just want to wish you a Merry Christmas for anyone who's watching today on this special day. Now, I don't necessarily call out a lot of companies, especially when it comes to shorting their share prices. I try not to be negative on this channel. I really like to just talk about positive stories where I think a company's compelling and they're undervalued. However, last year there were two companies where I said, you know, I think the shares are worth a little bit less than what they're currently trading at. And when I mean a little bit, I mean a lot less. And the first name that I said was worth a lot lower than what it should have been trading at was Open Door Technologies. Now, this is a name, guys, where I'm actually bullish on the story, believe it or not. But when I was valuing the company, originally it was trading at around $30 per share. And I said it was worth somewhere around $3 and $6 per share because I didn't believe that, you know, programmatic buying, or not programmatic, but like auto buying of homes was going to take over the whole market. But it did serve a small purpose. But because it would never take over the industry as a whole, I thought, you know, it might be worth $3 to $6 based on the revenue trajectory of the company. However, you know, you still have to bake in the fact that the company was taking significant losses, and so you have to add that into your valuation. And so once you did that, you know, you got to a valuation of $3 to $6. And so this goes back to the age-old story where you can be a bull on the company's story, but do the numbers make sense? And so, like I always say, valuation is a combination of quantitative and qualitative. And of course, just based on the name and the title of this video, you guys know what the second stock was, and I actually publicly took a short position on this particular company. And so you guys already know it's AMC. And so, of course, I took the short when the shares were around $30 per share. I made the short in June of 2021. So it was 18 months ago. But of course, you can see year to date, just year to date alone, the shares are down 83%. But you can see that there were some pumps that the Wall Street bet community was doing, but ultimately the shares have come down. So what exactly is happening? What's the story going on here? And, you know, are these shares expected to come back up like they did in previous instances? Well, I just want to remind you guys first, this is when I took out my short on the company. So this article came out in June 3rd of 2021. Now, this is the first time, at least in my investing career, where I saw a company make a press release and they said that we're warning our investors that they might lose money. And so when have you ever seen a management team warn investors that they may lose money? So that was a signal to me, at least, where, hey, I could actually make money on this because I'm actually aligned with management here, where I believe that the stock is worth a lot less than what the investors say it's worth. And if I take a short on this name right now, I could potentially make a boatload of money on something that management is effectively guaranteeing is going down. Why would management warn you? Management is not in the business of warning you that the share price is going to deteriorate. They're not in the business of eliminating your wealth. But if even management gets to a point where they're saying, okay, the share prices are excessively high and there's no story to back that up, then obviously there's a story there for shorting the stock. And so I generally don't short securities. AMC was the first stock that I shorted in many years. In fact, it might have been the first stock that I shorted since the whole Wall Street bet stuff came on. And just a reminder, guys, going a little bit into the article, this is what they said. They said, you know, that under the circumstances, we caution you against investing in our Class A common stock unless you are prepared to incur the risk of losing all or substantially or a substantial portion of your investment. And so, you know, they weren't wrong. If you're going to use this type of wording, you're effectively telling your investor base that, you know, be prepared to lose everything because what you're really doing is gambling. And so they warned you. They essentially guaranteed that you were going to lose your money. And so this was that, you know, unique situation where I said, you know what? I'm gonna short this stock, and it ended up working out well. And of course, if you missed that video where I did discuss shorting the stock and you sort of want to get inside my mind, I did make that video when this channel was a lot smaller. I think I might have had like 1,000 subscribers at the time. And so here's the thumbnail for you guys if you do want to watch it. You can see that it only got, 400 or 500 views, so it wasn't really much at the time, but the video's still on the channel at a certain point. But the interesting thing is a lot of the comments where people were saying, hey, look, I hope you lose your money, or you're like dumb for taking the short, blah, blah, blah. People went back and deleted those comments, which I thought was very interesting. But hey, if you're feeling embarrassed, of course, you'd want to remove comments. And so this was just one of those where I think there was a lot of people at the time, and this was more than a year ago. YouTube only will say it's either a year or 2 years. So this is, of course, a year and a half ago. And at the time, the one thing that was really bothering me is like, I don't have the ability to lie about like my own research and what I think about the securities. And so I found that people that were pumping AMC, their channels were going through the roof. I couldn't do that. And so, I'd get like a couple hundred views talking about the risks of AMC, and people who were pumping it were getting thousands and thousands of views. But c'est la vie. The point is that those channels are pretty much dead now, whereas my channel continues to grow. Sometimes, just telling the truth and growing slower is a lot better over the long run. And so here's where you can see how the short performed. It was purchased at around $30 per share. Notice that I couldn't time it. Look at how high it went and how long the share stayed high. And so you can see that there was pain in this position for a long time before it started coming down. And of course, you guys know why it started coming down. They started raising interest rates soon after this, like a couple of months after. So, you could be right over the long term, but you still experience short-term pain, and that's kind of what happened here. But this video isn't about gloating about making money on a short position. I do believe that there's a story here, and I think AMC shareholders who've held on from like that $30 per share range and now they're in that $4 per share range, I think they could even lose that $4 per share. I think this goes into like the cents per share, maybe like 60, 70 cents per share. And this is why. So you can see here, Barron's just recently released an article. This came out on December 22nd. And, the shares of the company fell after the company said that it would raise $110 million. And the way that they were going to do that is they intend to raise new capital through the sale of preferred equity units. And the reason why they're selling preferred shares is because they're not able to dilute the current shareholders by issuing new equity. So they're going to issue preferred shares. Now, this isn't the first time that those preferred shares have been trading. In fact, they issued these preferred shares a while ago and they gave it to the current shareholders. And let me just give you a better description of that, because there was somebody on Seeking Alpha that actually described this much better than I can. So this is a summary from Bram DeHaas on Seeking Alpha. So he said, back in August 29th of 2022, AMC launched a preferred equity unit, APE, as a special dividend to AMC shareholders. This APE preferred equity unit is economically more or less the same thing as a share. However, AMC couldn't issue any more shares at the time and resorted to preferreds, which is essentially all the same. So if you're going to issue or raise capital by selling more APE shares, eventually you might essentially dilute the AMC shareholders. And here's how. If you ever decide to convert these APE units into AMC units and just use one sort of listing as a whole, well, you've effectively backdoored your way into diluting the shareholders. And that's exactly the story here, because you can see here's the news. So they're looking to raise $110 million of new equity capital through the sale of APE units to a capital company, like a fund, and they're going to sell them at a price of 66 cents per share. And so that seems okay, because this is not diluting the AMC units yet, but here's where the big news is, and here's why the stock fell so much on the announcement of it. And the biggest news is that the company is looking for a shareholder meeting to vote on the voluntary conversion of APE into AMC. So there is your back door into diluting the AMC shareholders. They couldn't initially sell AMC shares because they're held on a shareholder vote in order to do that, but they launched this APE preferred shares, and I believe that it was always management's intention to eventually bring this APE shares into the AMC shares, and so that looks like it's what's happening now. And so he did some math here, guys, and confirm it if you guys think that it's wrong, but he's saying that if all the units and shares get voted, the APEs have a 63 to 37% advantage. So it looks like the shares will get converted. And so many hedge funds and professional investors hold APE shares and short AMC due to the valuation anomaly. And this is what he's talking about the valuation anomalies. You can see here that the long APE and short AMC trades makes more sense than ever because there is now visibility into the catalyst to make the APE shares convertible. And so you can see they're trading at $1.73 per share. AMC is trading at $4.40. So obviously these prices are expected to converge. And so based on the news, you can see that the APE shares went up and of course the AMCs went down. So, you know, this isn't an opportunity that I'm going to play in. I probably missed some parts of the story. So guys, let me know in the comments below. But effectively, the bigger issue with this whole story was that management warned you 18 months ago that you were going to lose a substantial amount of the value of these securities when they were trading at $30 per share. And instead of selling off these shares, a lot of people bid them up even higher and bid them up for a long time. And so there was an opportunity for people to take the money and get out of this situation. And instead, I think a lot of people held on to it. And now, you know, they suffered real portfolio losses. And, you know, what it talks about or what it speaks to is sort of the moral compass behind many of the YouTubers that were pumping this stuff. I understand that you guys were getting a lot of views. I understand that you guys were generating a lot of money on ad revs and even probably like Patreon subscriptions and stuff. But at the end of the day, you really have to ask yourself, did you really believe in this or did you just grift this? Because you heard a lot of people. Now, I understand that these people also hold moral accountability because it's their own money. They're making decisions and they should be doing their research as well. I get that part. But to a certain extent, you know, if you really believed that AMC shares would go up, okay, I understand that point. But if you were some of the people, and obviously it'd be hard to prove this, but if you're some of those people who believe that AMC had no value, but you were pumping them anyways just to get the views and stuff, you really have to look at yourself and, you know, ask yourself sort of like, how can you sort of be okay with your behavior with this security or with that type of like pump behavior? And so it just didn't make a lot of sense to me. I think credibility matters. I think research matters. I think looking into the story, doing the work, building out the models, all of that stuff is very important. And that's what we really try to focus on this channel. Now, one stock that I recently put out for you guys that, you know, we did walk through the whole story, we walked through the model, we walked through the valuation, and at the end I concluded that although I love the company, I'm not comfortable with the current share price yet, is a stock by the name of Tencent. And I did a full, thorough analysis of it, which you can get to if you haven't seen that video right here.